Look at your last mortgage statement. Somewhere in that paperwork sits money that already belongs to you, and nobody is required to send a letter telling you it's there. One retired mechanic in Ohio got back $840 he didn't know he'd overpaid. A retired schoolteacher in Virginia found $412 folded into a routine-looking envelope she almost threw away. A widower in Washington had $3,100 of an overdue tax bill covered outright by a program he'd never heard of until a caseworker mentioned it in passing. By the end of this, you'll know all 5 ways homeowners get paid back in 2026, including one most people assume only applies to renters. They're wrong, and one of them is the payment most homeowners assume doesn't exist at all, tied directly to your own home's equity, able to hand you thousands without you selling, refinancing, or taking on a new monthly bill. Stay through to that one. None of these 5 payments exist because somebody likes you. They exist because a legislature, a state agency, or a lender was required to build them. They stay unused because nobody at the county office, the state office, or your mortgage servicer is required to call and tell you they're there. The silence is the whole system. Every program below only pays out if you go looking for it first. I put this kind of breakdown out every week. The programs you already qualify for, the rules that quietly changed, the money already sitting there with your name on it. If that's useful, subscribe now and turn on notifications so you're not the person who finds out about the 6th one a year late. Now let's get into it. Payment 1 is the property tax circuit breaker. Most homeowners have never heard the term because it doesn't show up on the regular tax bill. And here's what people get wrong. A homestead exemption and a circuit breaker are not the same thing. Dozens of states run circuit breaker programs. If your property tax bill rises past a set percentage of what you earn, the state can send back the difference as a check or a credit on next year's bill. The catch is that almost none apply automatically. You usually have to file a separate form through your state's Department of Revenue, apart from your regular tax return. Skip the form, skip the money. Every year. Frank is 69, a retired mechanic in Toledo, Ohio. His taxes kept climbing while his income stayed flat. A neighbor mentioned the program. Frank filed for the first time last year, and $840 came back. He filed again this year because now he knows the form exists. Here's the test. Pull your last property tax bill and compare it with your income. If the tax share keeps rising while your paycheck or Social Security doesn't, check the program. Circuit breakers often have their own income limits separate from homestead exemptions. Some states also allow retroactive filing a year or 2 back, so a homeowner who never filed may have more than one refund waiting. The form is usually 1 page, but it often lives on a different part of the state website than the page people find when they search for property tax help. That's why it stays buried. If you're on a fixed income and taxes have outpaced income, this can be one of the largest payments on this list, and it resets every year you forget to file. Stay with me, because Rule 2 isn't a refund at all. It's money paid to you before tax season enters the picture. Payment 2 is the home energy rebate. Most people hear that and think tax write-off. But these programs can pay homeowners directly for upgrades that cut energy use, insulation, heat pumps, updated electrical panels, sometimes windows or doors. Several pay at the point of purchase or shortly after, so the benefit can show up whether or not you owe tax that year. Lower income households often get a larger share of the project covered, sometimes the majority. Higher income households can still qualify for rebates on specific upgrades. The exact amount depends on household income, the state, and the program. Here's what trips people up. This can be separate from a tax credit you're already claiming. A homeowner may collect a federal tax credit and a state rebate on the same efficiency project. Contractors may only discuss one side of that equation. So before you sign a heating, cooling, or insulation contract, check your state energy office first. Timing matters. Rebate pools can be first come each year, apply earlier in the funding cycle, and processing can be faster with more contractor options. Apply after a pool runs low, and you may have to wait for the next cycle. Utility companies may also run smaller rebates on top of state programs, including bill credits for upgrades like smart thermostats or attic insulation. Homeowners miss money simply because the utility and state programs aren't always presented together. The test is simple. Before any contract gets signed, call your state energy office and ask what's currently funded. Rule 3 is the one sitting in your mailbox right now, disguised as junk mail. Payment 3 is the escrow overage refund. If your mortgage includes property tax and insurance, your lender collects that money monthly and pays those bills for you. If the estimate runs high, the escrow account can end up with a surplus. After the annual escrow analysis, any surplus above the allowed cushion has to come back to you, usually as a check. The problem is how it arrives, folded inside a routine-looking mortgage servicing letter that many people barely read. Carol is 64, a retired school teacher outside Richmond, Virginia. Her homeowner's insurance dropped after she switched carriers, but escrow kept collecting at the old rate until the annual analysis. Her refund was $412. She almost threw the envelope away because it looked like a form letter. If your insurance premium or tax bill changed recently, open every servicer envelope carefully. There's also a second escrow refund. If you refinance or pay off a mortgage, the remaining escrow balance has to come back to you, usually within 20 to 30 days, depending on your state. If you refinanced in the last year or two and don't remember receiving a final escrow check from the old servicer, call. It may have gone to an old address or eventually been transferred to the state as unclaimed property. Before we get to the last one, Rule 4 is the payment that isn't really a payment at all. It's a delay. And for the right homeowner, that delay is worth more than a check. Payment 4 is the property tax deferral program. This isn't free money. A number of states let seniors, and in some cases homeowners with disabilities, defer part or all of their property tax bill until the home is sold or transferred. The deferred amount accrues at a modest state-set interest rate. You keep the cash now, and the balance comes out of the home's equity later. For a retiree whose home has appreciated, but monthly cash flow is tight, that trade can matter. That means the benefit is really about cash flow. A bill pressing on you today gets settled later from equity you weren't planning to spend right now. But the caveat matters too. The taxes still accrue and still get paid. If you plan to leave the home to your kids, understand how the deferred balance reduces what they eventually receive. Margaret is 72, a retired postal worker in Eugene, Oregon. Her home had nearly tripled in value, while her income stayed fixed to a modest pension and Social Security. Property taxes were eating almost a fifth of her monthly income. She enrolled in the deferral program, and those taxes stopped coming out of her checking account. The balance now accrues against her equity at a low state-set rate and will be settled when the home sells. The test: if your tax bill is taking a growing share of fixed income and your home is worth more than when you bought it, call your county assessor and ask about deferral. So here's what I want you to do. The benefits, the discounts, the assistance programs most seniors qualify for but never actually use. I gathered them all in one spot, organized by state and by program, so you don't have to dig through confusing government websites for hours. It's quick, it's straightforward, and any senior can find exactly what fits their situation. No matter what state you're in, there's help out there you're probably leaving on the table. It's called the Senior Exemption Playbook, and it's sitting in the first pinned comment right under this video. Just tap it once and you'll have everything you need. Now stay right here. Payment 5 is the one most homeowners assume doesn't exist at all. Payment 5 is the Homeowner Assistance and Hardship Fund. Most people assume it's for renters or that it existed for one crisis year and vanished. A number of states still run homeowner assistance funds that help with missed mortgage payments, property taxes, or utility bills after hardship, job loss, medical bills, a spouse's death, or a drop in income. Many programs are still processing applications. They just don't get the publicity they once did. Payments usually go straight to your mortgage servicer, tax authority, or utility company, so it may not feel like a check in your hand. But it reduces what you have to pay. Some programs can also cover part of home repair costs tied to safety or habitability. Gerald is 66, a widower in Spokane, Washington. His wife's medical expenses drained their savings and he fell behind on property taxes. A county caseworker mentioned the state homeowner assistance fund almost in passing. Gerald applied and the fund covered $3,100 of his overdue property tax bill directly. The caveat is funding. These programs use limited pools of money and some close once that money runs out for the year. And hardship doesn't always mean one dramatic event. A reduced work schedule, a spouse moving into assisted living, or an unexpected roof or furnace repair that drains savings may qualify, depending on the state. The application typically asks for proof of hardship, proof of home ownership, and a recent mortgage or tax statement. The test: if you've been through financial hardship in the last 2 years, call your county or state program and ask whether funding is still open. None of these 5 payments require special connections or a certain net worth. They exist because a legislature, a state agency, or a lender was required to build them. They mostly sit unused because nobody is required to tell you they're there. Here's your action list. Call your state Department of Revenue and ask directly whether a circuit breaker program applies at your income level. Check your state energy office's site for current rebate amounts before you sign any contractor agreement. Pull your most recent escrow statement, and if your insurance or tax bill changed recently, ask your servicer for a new analysis. If you're on a fixed income and your equity has grown, ask your county assessor about a deferral program and what repayment eventually looks like. And if you faced any hardship recently, call your county or state assistance program and ask whether funding is still open this year. Most homeowners who actually claimed these payments didn't do it in one afternoon. They picked one program, made one phone call, and moved to the next one when they had time. No perfect credit required, no income bracket, no special status, just paperwork that already exists, sitting in an office that was never required to reach out to you first. Nobody at the county is going to call you about this. But now you know where to look, and that's the only thing standing between you and money that already has your name on it. Tell me in the comments which one of these 5 you didn't know about: the circuit breaker, the escrow refund, the deferral, or the assistance fund. I read every single one, and if you want the full state-by-state breakdown of exemptions most seniors miss entirely, that's exactly what's waiting in the pinned comment. Next week, I'm covering the 3 notices your county is legally required to send before it can touch your home over unpaid taxes, and the one most homeowners throw away without reading. Check your last property tax bill for something that looks like a form letter. You might already have what we're talking about sitting in a drawer. I'll see you in the next one. I am no licensed expert, so make sure to check all information with verified sources before you make a move.